Wyatt, what's up? Good to see you.
Hey, how are you? Thank you for
Doing
having me.
great. Doing great. Yeah, I'm pumped for this. We want to have more investors and venture partners, people minded with like looking ahead, more on the show and have a deeper presence. And so when we were thinking through that, I was thinking back to your Money Machines request for startups. I know we've been trying to get this on the calendar for quite some time, so I'm glad that we're finally making it happen.
Yeah, no, really appreciate you guys having me on and excited to chat.
Okay, so frame your role at VanEck Ventures, both like what you're doing in that group and then the role that that team plays more broadly within VanEck. I think that'd be a great place to start.
Yeah, let me give you. I'll take a little step back and just how we got to VanEck. So my partner in this fund, Juan Lopez, and I met at Circle. I joined Circle in 2018 through the acquisition of this company called Seed Invest. Circle, despite being a big player in the payment space, was very early to the entire tokenized asset thesis and the RWA market, probably before anybody was, dating back to 2018. So that's what I spent a lot of time on at Circle initially. It was just the wrong timing, both in terms of like the infrastructure that we had at the time with blockchains, with wallets, with bridging, as
Mm.
well as just the completely wrong regulatory environment. And so, we're very bluntly told not to pursue things around tokenization from regulators. But throughout that, Circle tried their hands at many different products, including an exchange business, payment business, tokenization platforms, and USDC was launched through that period of time. And of course, ended up exploding. And so on the back of DeFi Summer, we started to brainstorm around what would it look like investing in the USDC ecosystem. So both Juan and I had those views. We're able to share them with leadership and decided to come together to launch Circle Ventures. And so that's how we got started investing. We had the pleasure of investing in amazing companies very early on, like Rain, Dollar App, now Arc, Blackbird, and many, many others, kind of all up and down the stack from blockchains themselves to wallet infrastructure to end applications for businesses and consumers. And through that, ended up meeting the team at VanEck, who VanEck is a traditional asset management firm. However, they were very early to crypto. They're, I think, one of the first, if not the first firm to file for the Bitcoin and ETH spot ETFs back in 2016, 2017. So had to wait a really long time for those to come out, but built a research arm, launched a hedge fund, and had a lot of demand from founders to be on the cap table earlier. And so when we met, we just really kind of clicked over this thesis of like, we think the two biggest buckets that are the largest markets in crypto are going to be capital markets and payments. And having that connection between our time at Circle and being able to sit within an asset management firm that's 70 years old and, commands over 200 billion in AUM, we could probably be dangerous. But, we want to come in early, be one of the first checks into these companies and be a 0 to 1 partner. And then over time, we'll scale up our funds. So we ended up raising a $40 million vehicle. So while I think we can be very strategic to entrepreneurs, we are not a strategic fund. We are a for-profit venture fund. All of our funds are set up like that at VanEck. And we're in the process of launching more funds soon so that we can cover the entire entrepreneur journey, not just in crypto, but in any industry that we think is going to change the world. And so we're very passionate right now about all things that are happening around fintech as it relates to blockchains. So we can dive into that because we geek out about it all the time. And then we have other funds that are set up to capture where I think more of the market is moving in the AI space, which is much later stage than where we are.
Yeah. Such an amazing background in terms of the role that, I mean, Circle Ventures has played such a crucial role in some of the most notable and impactful startups surrounding the infrastructure of what stablecoins are. I think Rain is a perfect example of that. What were some of those learnings that you specifically felt like you applied into the VanEck Ventures team and bringing that to life and going into that you actually took from the Circle days? Going through that, it's different use case, different company, different history. What was some of the muscle that you built there that was helpful to now be successful at VanEck?
There's a certain founder archetype that I think we noticed, and I mentioned some of those characters for being great examples of they had a deep understanding of the market that they were attacking and how it works today. Right, so they don't come in blindly and just say like stablecoins solve everything. If we can just move money between wallets, that's it. We're good to go. All the companies from that era did not survive. It was the Bridges, the Rains, et cetera, many other different players, BVNK, that solved the hard points generally around on-off ramping from crypto, as well as nailing compliance. And I think compliance is going to be and continues to be a huge category. Hasn't really made its way into tokenized assets yet.
Mm.
There's so many analogies I can pull between like how payments were thought about at the time and how tokenized assets are thought about today, which is like you put them on a blockchain, you let them run wild. and that's just not how the world works. So I think we now have a founder archetype that we understand and we look for, and they have to have that deep understanding of like, how do these markets operate today, and where are the inefficiencies, and to not be idealistic about just put it on a blockchain and it's solved, but to be like very pragmatic about which parts of blockchain infrastructure could actually solve for these markets, and understand that, especially in this kind of like, 1.5 phase as we move to these new rails. And I think this is like a fintech 2.0 moment, that
Yep.
it's not something that happens overnight, just like e-commerce. Like it happens over 10, 20 years. AI could definitely accelerate this. Stablecoins could definitely accelerate this. So maybe it happens at a faster clip, but it's not like a 1 to 2 year transition. So I think if you look at a lot of the data around stablecoins today, whether it's for payments or capital markets use cases, it's growing rapidly, but we're still kind of in the 1 to 2% penetration if you like actually sift through the
Yeah.
data. Artemis and Visa, I think, have done great examples of that. But yeah, we definitely look more towards founders that just like have deep domain expertise in whatever industry they're attacking, versus just thinking as this broadly as like crypto. And we need to specialize in crypto. I think crypto has proven that it has strong product market fit in changing financial services. Then you have to say, okay, like what aspect of financial services are you attacking? Of which there's massive TAMs to go after.
Yeah.
We really want to go after, I think, capital markets and payments first and foremost.
Yeah. Um, when we look back at the Circle Ventures USDC plus some of those infrastructure plays and key areas of pain that those founders solved, there are clear winners and there are clear like lanes of focus there that are awesome success stories. It seems to me though that there's like a very interesting and a similar maybe framework, but a unique opportunity now as we enter the kind of modern capital markets standpoint. And I'm curious like where you see the opportunities. Maybe this leads a little bit into the money machine stuff, but like where you see similar opportunities where the firm can actually align, accelerate, attach themselves to these types of founders, but specifically founders who might be thinking more about like, how you define capital markets and payments. Like, what are some of those lanes under those categories that you're really excited about right now?
Yeah, one of the reasons Juan and I came to VanEck versus say starting our own, Wyatt and Juan Capital, was we felt like we could be really dangerous and like hit the ground running, because VanEck has such a wonderful brand, has 70 years of operating experience, and can let us focus on what we really want to do, which is helping founders go 0 to 1. But we can
Mm.
also get creative in ways that maybe a venture capital fund in and of itself can't. We can do things off balance sheet. We can lean in from a product perspective. So that's not going to be broadly applicable to every company, but I would say on like the capital markets asset management side, it absolutely is. These companies are successful. We should be able to partner in a meaningful way. Yeah, I think we just have a lot more flexibility than say a traditional $40 million venture fund, because we sit with inside a $200 billion asset management firm. To get into like specific opportunities today, I mean, I kind of break them down as like B2B payments and capital markets. We can get into like what those specific use cases are. On the payment side, I mean, like Stripe is a $150 billion company. They touch maybe like max 2% of global B2B payment flows. And I think if there's ever a signal to be bullish on, Stripe had zero crypto strategy 12 months ago. They have a phenomenally integrated crypto strategy today with Bridge, with Privy, with Tempo. And I think they're proving, and this is one of, I think, the other key pieces of the founder archetype that we look for. They're proving and showing people how to commercialize this technology. If you look at what they
Mm.
put out today with DoorDash and Airbnb, like they're bringing the customers to the table that most L1s have attempted to over the last 5 years. They're closing them. I think Canton, I think Robinhood are starting to do some of those things on the capital market side. Arc and Base are also notable examples. These are all, quote, corpo chains, but the corpo chains have the muscle and the BD expertise because Stripe already owns that account. So they can easily go into those enterprises and do a deal. So you have to be careful, especially as a seed station investor. We need to be careful about like, are we competing with Stripe here? But I think there are tangential areas in which we can be very complementary to that stack. But I also think, again, they're small, still a small percentage of the global TAM, which is why they get such a strong premium to companies like Adyen, because they're so innovative, because the Stripe brand has such a premium. But that doesn't mean that there aren't going to be opportunities for companies to go in and compete. OpenFX is a really interesting one that's recently announced a large fundraise, who I think in the space of 24 months went from zero to
Yeah.
tens of billions of
Yeah.
dollars
Those numbers were crazy.
opportunity.
We I think reported on that the day that they announced that latest round. And yeah, the growth numbers there are absolutely wild. You guys were involved
Yeah,
with
because
this?
no, we're not investors. But just, fans of the company from a distance. But I think that just shows like they're solving a very specific pain point in a specific market.
Hmm.
There are a lot of pain points to still solve in the global South, and we are investing behind them. So, we're investors in companies like Czar, who are enabling a consumer to now have a non-custodial wallet and exchange their local currency for stablecoins and hold them versus holding cash at their house and holding US dollars. You're giving people digital dollar access. That in turn is creating this really interesting merchant network that almost looks like Uber for stablecoins. Separately, we're working on similar unannounced investment that's providing last mile fiat liquidity for companies that are moving stablecoin payments, where you have actually a settlement issue. Stablecoins feel instant, but they actually don't settle unless the entire world is on stablecoins, which we know they're not. The acceleration of those markets actually creates new issues and tensions that you can go attack. And I think we're going to see a lot of big businesses pop up in that sector. And then on the capital market side, that's more closer to home for VanEck. Like a new railway is being laid, and it's upon us to be competitive as an asset management firm and tap into that audience. There are billions of people who now have connectivity to stablecoins and crypto wallets. That's a new lane. And I think actually creates a much simpler customer acquisition channel where you're not going through so many different, family offices and RIAs and people that are managing wealth. You're actually able to go direct to a consumer via an exchange, via wallet, via some sort of fintech app.
It seems sort of full circle given your origins. You said it's Seed Invest, looks like acquired by Start Engine, which is definitely like in that similar conversation around capital raising, challenging incumbents. What are the kind of parallels that you see in terms of maybe what you aha moments or things that you noticed earlier in your career with like Seed Invest and capital formation that you are now looking into the capital markets moment of today? It seems kind of like a thread throughout your journey.
Yeah. Yeah. We just invested in a company called Legion that I think is probably best positioned to solve these problems. Part of it is a regulatory issue, but ultimately it's very hard to give retail access to companies today, whether it be them buying directly an equity position or them being rewarded as a user. Uber was the first to try to crack this through their IPO with drivers, but like the reality is, in the same way that we incentivize crypto participants with tokens, we should be able to do the same thing with equity. I think that will change. The not accredited investor rule should change. And in doing so, I think you're going to just open up access where everybody can invest in private companies. Today, because of those limitations, you have products like Robinhood Ventures, where you can invest in a basket of private companies that trade publicly. And, that's, I think, enabled people to have access to things like OpenAI, Stripe, Databricks, et cetera. So there's clear demand on like the late stage winners, but that's not how most people make money in venture. You're underwriting like maybe a 2-3x or something like that. There's opportunities, and why we invest in the early stages is like a 2-3x does nothing for our fund. We need X, 200x, 500x, 1000x. So I think there's still a world in which we need to educate the retail market on like how venture works. I see the discourse daily in crypto where they point at things that fail all the time. Reality is like 90% of your venture portfolio is going to fail. Maybe there's ways in which people don't necessarily have to invest, but they can earn. So those are very exciting categories, but the infrastructure to make that happen like really hasn't been built. Blockchains are very good at that. So I think you're going to see a lot in private fund tokenization infrastructure from companies like Legion, Superstate, and then more on the publicly traded side, we have positions in companies like Dinari, who enable you to access tokenized equities from everywhere across the world via a single API. So all assets, I think, are coming on chain. It's the disconnect today is more on the distribution side. I think capital markets will follow that once we have clear regulation around things like the non-accredited investor rule.
Yeah, I'm excited to maybe an ask. I'd love to talk to the Dinari team. This was something that also came up in a conversation last week with the Sesto platform. They're building like a one-stop shop for trading what you believe. And I think they work with Dinari in some ways, or at least we're building on top of them in some ways. So would love to highlight that team more. It seems like a really interesting, they have a really interesting seat at this table. Okay, I'm popping up the Money Machine's request for startups here. The trash truck honking outside my window. Love that. Where do you see Dinari falling into this, or are there any like specific? I think there are like 12 of these that you called out, ones that you want to focus on, or any like changes since you've launched this. I think this is now maybe a month or two old.
Yeah, no, I can jump in on the Dinari piece specifically. I mean, it's very clear that how we ingest information and make decisions is changing dramatically, and that agents will be a huge component of that decision-making framework. And so if you think of asset management as an example, ETFs and how these products are ingested by the end consumers, it's likely a function of like what you were presented by your financial advisor or the investment platform that you use. And so you're seeing increasingly people are playing around with Claude to actually make investment decisions. What should I Claude, what should I invest in? Or I want to build a
Mm,
position in AI companies. How do I do that? These agents are then going to go act on your behalf. And so I think Dinari serves as like a catalog and a library that could happen. What gets more interesting is when the asset issuers then publish. And I think what's cool about this is it becomes kind of a headless marketplace where on one hand you have the assets themselves. Let's take an ETF from VanEck, like SMH, which I think is our largest asset today, our semiconductor ETF, which gives you broad exposure to the AI economy. An agent doesn't need to be sold that. They don't need to go, you don't need to go play golf with them or build a relationship for 5 or 10 years. The agent is going to make those informed decisions based on like real data and returns. And so it becomes more of and so all these tactics we have of like acquiring AUM and I don't know, like it completely changes that dynamic. And so you need the catalog and you need the library for them to go access this. Dinari enables you to do that in a much more global environment than say how, traditional, if you were buying through a traditional broker would work, which is just like the settlement times between countries doesn't really work. And I think that's where tokenized equities can really succeed. But yeah, I think the broader purpose of this was as we were thinking about agents in general and agents as it overlaps with finance, like the name money machines came up because it's like that's really what they are. They're going to handle all sorts of administrative tasks across payments, across investing, and challenge, I think, the nature of how we think of these businesses today. And so it's something we're very excited about. I was just going to say one quick caveat is I think a lot of these companies today, like you have to build a durable business outside of the agentic economy before you're going to be able to go maximize value in the agentic economy. Because I think there's still not a lot of activity there. It's still the hobbyists that are playing around with OpenClaw. They're trying to hook things into Claude. So like it's getting exponentially better. I think there's too many businesses that are probably jumping on just the agentic side of things and seeing that as much luck. Versus you can still build a lot of these businesses today for humans and then optimize those businesses as more agents come online.
yeah. So you said the word administrative, and I think that's a good word, but I'm also thinking through like for investors or maybe specific types of investors, I think we can all agree that there's going to be a reality where, and there already is a reality if you look at the volumes, like agents are trading, they are making investment decisions on behalf of the people they represent based on either direct I guess that's where I would be curious in your mind of like where do you see the real use cases between investors and the agents that represent them? Like what are the first initial use cases where agents will be trusted to go and actually execute these types of on-chain actions, and what is missing in your view from that happening at a scale, at a compliance in a compliant way? I'm imagining there's some missing pieces to actually do this, but we're starting to see really interesting opportunities. What do you think about that?
Yeah, I mean, I'll give you like a really quick example of how it could be used in the venture capital world, which is like we largely use templated documents. We use like National Venture Capital Association documents. We do safe notes. That's generally the Y Combinator standard. We do preferred equity. The closing conditions are all largely the same. So Fred Wilson, who's general partner at USV, took like 10, 15 years of his data, like chucked it in Notebook LM, and basically was like, I have a lawyer who's an agent because these things are so repetitive that these tasks can easily be learned done. And so like you're going to rely a lot less on your lawyers to do these activities. And then separately, like if the next piece is just funding something, like why can't an agent fund on your behalf? If it knows where the bank account information is, or if they want to get paid in USDC, that's not a very challenging task. So like those are simple administrative things. Where it gets more complicated are some of the points you mentioned around like moving payments on behalf of a company or actually buying and selling equities and trying to follow the laws there. I mentioned this before, but I still just think there's a giant lack of compliance around things like tokenized equities. A lot of them are just following some Reg S exemption, but not really tracking the secondary flows, meaning that they could be sold abroad and immediately be traded back into the United States, right? It could be unknowingly, a North Korean trading with somebody in New York. And I think you're going to have like countless examples of where that starts to fail. But if we take current compliance tools and start to put agents into those workflows, I guarantee you that they're just going to get better and better. So as these models get better, I think the tools that we're going to be able to build are going to get a lot better. Today, it's still a little bit of, as it pertains to crypto activity, it's like the most simple forms, like direct an agent to go do something, have it go buy and sell Bitcoin, build trading bots. Like we've had these for quite some time. The next leg is, I think, going to be like, how do you apply them to real workflows? The companies
Yeah.
that are in a really good position to do that today would be the likes of Ramp and people who, again, already own that customer, which is why if you're like, you're purely building it for an agent today, it's hard to figure out where you're going to go acquire that agent. Whereas if you have a platform with sticky customer base, you're just going to enable people's agents to go right into the workflows that you already trust. And you're going to say, like, I'm enabling my agent, my Claude agent, to go hook into my Ramp business account and go run my finances and tell me how things should operate. And I'll just authorize. And over time, as you build trust, you'll trust it as an employee.
Yeah. Where do you see personally as an investor now, something that I'm kind of torn on this piece a little bit. You have such an opportunity for agents to do research and to gather information and to synthesize that information at a scale and an accuracy that is just superior to a human being. Like there's no doubting it. But there's also this element, and you kind of spoke to it earlier, of like there's a human gut feeling of like a person and how you feel like that person will operate in the world when they're required to go through like very difficult situations and all the things that make, I think, good investors in the trenches with especially early stage founders and like picking winners. Like where do you see the role that agents might play in that kind of early stage investing landscape versus the things that you think will always remain the human's job? How are you thinking about that?
I mean, I definitely think you always want a human in the room. I would love to test over time, like, could you replace humans? I think one thing Juan and I love is like we love being a small partnership. And so I think that naturally leans towards like we're going to have to build agents to augment ourselves to be the most productive versions of ourselves. So, we don't necessarily want to have a 30-person team. But today that lends the advantage of like we probably could build something equivalent of that in the next couple of years. But in the meantime, what you can do is you enable the agent to just observe you and learn and listen to your conversations. And so we're constantly talking about feedback. You get off a call, you're like, what did you think? I like this. I like that. I didn't like this. I didn't like that answer. Why didn't you like that answer? Right. And so we
Mm,
enable our agents to listen to us and learn, and they
mm, mm.
they
So the
understand
agents
our.
in that kind of debrief call, oh,
Sure, yeah, and they can
or could
understand our
be.
writing style and how we write memos, and that a lot of that we've taken from our time at Circle. We were very memo forward. But something that I think stuck with both of us, we were having a conversation about this the other day. Um, I'm forgetting who it was from Sequoia, was talking about how they personally write all their investment memos,
Mm,
and they know how excited they are about investment, how much they want to sprint after it when they actually write the memo, because the memo writes itself. And I think we've all felt that as investors of like, if you're pumped about a company, like you can't wait to write something down and share with everybody else, and then get all your questions answered and get back on the phone with this company. Like you can't wait to get to work. And so if I think our concern is if you push too much of the actual diligence and intelligence work to an agent, you're probably going to get some like, I don't want to say it's slop, but it's just going to be like, yeah, sure, this looks like a good investment, right? Because I still think you have to bring your context to the situation. So over time, I have no doubt that like there's going to be an analyst on our team that's probably going to be like just as good as if we hired an employee. The question is like, could we promote them to partner? I don't know, not yet. But like the way that these models are improving, right? If you assume they're going to get a million times better from here, absolutely. Because the context that we probably don't have that they can go acquire is like all the greatest venture capital knowledge of all time. They can acquire it from the internet, from podcasts, right? And like they can go form what would be maybe the ultimate venture capitalist. But another area I think AI is really good at today is like starting to pick up questions and ask things that like maybe you didn't think of.
mm.
And so, again, it can learn what questions you ask. We like to understand about the founder's background, their origin story, what motivates them to really go take this shot, because it's not an easy, like no founder has an easy job. It's the hardest job. So like, why are you doing this, right? Like you're destined to fail. What wakes you up every morning to go out there and like, knowing almost certain death, like do it anyway. And that's a really important thing. But when it comes to like the tactical aspects of the business, like Claude is amazing. It can go through everything. Like how are you thinking about monetization? What other aspects of the business or what other channels could they grow into? New revenue lines, right? So anything where you can go feed it tons of data, like it can come out with some really, really great questions. So yeah, today it's an analyst. Let's see, maybe one day it's a partner, but not yet.
It's really cool. I know we got to wrap here soon. Any final thoughts on money machines, specific areas maybe that You have 12 here. Any in the last few weeks that seem new or exciting that weren't included, or maybe edits to this? I highly
I
recommend
gotta
anyone
pull it up.
listening will.
I have my
Yeah,
screen.
it's. I wouldn't
I don't have
expect
it on
you
my
to
screen
remember
now,
all
but
of
I
them,
will
but
say since we've published that, I think we've made 2 investments, maybe 3, that we've covered on that list that we didn't have before. So we haven't announced them. I can't say the names, but I believe the titles were like liquidity operating system. We've made a really interesting investment there that we're super excited about. There's another one around like yield and DeFi as an API, which I think is incredibly important for agents, right? Kind of taking that catalog approach. This is something that we think is very complementary to what Dinari has built, more on like the yeah. So we've made an investment there, and there's some interesting things around like indices as it relates to new markets. I'm not sure exactly how we described it, or if we might have scrapped it. Man, we might have scrapped it, but there was another one around
this was
how
what
new
you said
financial
before,
marketplace.
liquidity ops.
Yeah. We've made an investment there. So some of these things we were working on, we wanted to put this out there, and we ended up closing 2 investments from it. So that was great. But the next one is like we're strong believers that asset management and how products are created is going to change. Because again, like an agent just might be superior to us in building an indice or building a new marketplaces. So we talked a little bit about in here like compute marketplaces. But what about just like net new marketplaces? So that could be more like generative indexing around new types of prediction markets, and how do you then package those up and sell them to, I think, both retail audiences but also more of the institutional crowd, which today is still largely locked out of most long tail prediction markets. So yeah, it's been very cool. Glad we put that out. We'll continue to add to it, and hopefully we'll actually have a lot more coming soon on just the broader money machines thesis, because there's some great stories that we've picked up on over the years from a lot of different founders, and we want to help highlight that, because I still don't think the world understands. And I'm glad you guys are doing this type of media, because like my father-in-law worked in finance for like 20, 30 years and has no clue what stablecoins are, right? So like it
Mm,
just goes to show how early we are. And then you add in this AI stuff and it just gets people confused. So, we want to continue to tell the stories of the amazing founders that we've had the pleasure of working with, from dating back to Circle to now here at VanEck, and elevate their stories so it's more easily understandable, because there's some really cool things being built.
yeah. Well, that's definitely our mission here. So if you think of ways that we could help, let us know.
I'll keep you
We have a
posted.
podcast called Stable Minded. So we really do 2 things. We do this show live, and then Stable Minded, which is a perfect medium for that sort of thing. I'll actually be in New York and Brooklyn next week doing more interviews. If you have any founders around that area who want to go deeper and sit down and do more of that, like, hey, what are you building? Where have you been? That would be a great opportunity for that, because we love elevating those stories. So let me know.
Cool. Will do. Will
Awesome,
do.
Wyatt. Well, thank you for the time. You're based in and around New York, correct? Is that true?
That's right. Yep. Yep. You can generally find me in Manhattan today working from home. But
Awesome, man. Well, maybe we can connect next week. Thanks for joining us, and appreciate your thought leadership in the space. It's been fun learning from you.
thank you for having me. Appreciate it.
Go, man. Cheers.